Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, May 3rd, 2024. It's 9:04 a.m. Eastern Time, so the market hasn't even opened yet. Unfortunately, I've got something going on from 9 to 1 today. Believe it or not, it's called Pool School, the new pool. Just had put in. Actually, we tore the old one out, put a new one in, and we got a company gives you a pool school, and it's already scheduled. And it's got pool pump has we have a pool heater, pool chiller, saltwater pool, which I haven't had before. I had old chlorine pools and saltwater generators. It's things like it's like the probably the control center of the space shuttle. All these controls. So anyways, I've got to go through that. Hopefully, we'll cut it short. Most of it's probably basic stuff. But if they do run the distance, I'm going to be out or preoccupied till 1. I'll be doing that here, so I'll try to cut in and check the market. I just wanted to get a video out to you guys since I won't be able to do anything after the open today. And just reiterate, I got this out to you today. We're right back there. This is number, we had the breakdown. Remember, I'm talking about the trading range, big trading range. Breakdown, back test. That was back test and rejection number 1. Then a second back test, rejection number 2. Third back test. We are making higher lows so far and higher highs. And how we close the day will be seen, yet to be seen. But, I just wanted to reiterate, I've had a trading plan all along. It was kind of a trading plan I shared with you guys. Everyone's plan's different. I mentioned that I pulled my hedges today on ZB, which is the futures for the 30-year Treasury bond. And that trade just worked out beautiful. Actually, still carrying shorts in today. Like I said in the, before Apple reported, somebody asked, yes, you got to lighten up before earnings. It's just a crapshoot. So I've lightened up. I'm not adding back just yet. The shorts, but I may today. I'm going to check in through the day. It is an objective level. If I didn't have anything, I would be adding there. But by pulling the hedges off, I went from fully hedged up and even then some to now net short again. No hedges. And let me show you how well that hedge worked out. We literally took it at that low point on QQQ right there. That's when it was posted. ZB was at the lows. And we just hit, here, I'll get to you, that 116, 112 target. So that was I told you I may hold out to the downtrend line before, but I was considering closing early, and that's it. So to me, just a great trade today because you look at QQQ, I'm sorry, let's go to TLT and show you what we did here. TLT, this is where we closed yesterday at the bottom of this red candle here. So far that was the high, right when we hit that price target on ZB, pulled the hedges off. That's a 1.6 gain. Remember, ZB was suggested at least a double position, twice the weighting of QQQ. So you take 1.6 times 2, that's 3.5%, another 3.5% on top of what we already had. And again, taking it off the lows recently. And that compares to the pop that we had in pre-market of QQQ, even from yesterday's close, actually, of, where is it there? 1.78. So more than offset any give back on the QQQ shorts. And again, being that Apple was reporting lighten up. So I'm going to check back today. If I see a rejection, which I expect today, I think we'll probably get rejected here, run back down, then I will most likely be adding. I'm going to take this trend line that we have right here on QQQ. I'm going to move it now to come into these reaction lows. That's a better fit. So I'm giving you the levels kind of real time. I didn't have a time to update this chart, but there it is. So you have the reaction off the lows, this uptrend line, and should we get rejected here, that's going to be comes in with price support too. That's your first logical resistance. So fade the gap rally would take us down to about a 2% drop should they fade it and take it down there, and then a break of that, and then you have the recent lows. That's going to open the door to a much bigger drop, in my opinion. We still have the pop in the futures. It's still bizarre world. Was much weaker than expected employment data, and Guys, and one reason I pulled those ZB hedges off and I want to be raw short now, fully short, is I turned, CNBC on to just hear the numbers, how the employment data came out. And my God, if what was that game they played when it was, who was it, one, Biden, one of the presidents, when he said a same word over and over, you get a quarter every time, or, it's a little a betting game. If I heard the word Goldilocks come out of all the analysts and everybody on there, it must have been at least half a dozen times. And they were all crowing over the fact that it's Goldilocks scenario because the employment, it's okay that employment's dropping off now, but that's good. And because anything to increase the chance of a Fed rate cut. They even, I think it was Santelli, Rick Santelli, maybe made the comment, one of them, about you could have an asteroid heading to the Earth about to, smash into us, and if the Fed, announced they were going to cut rates, the market would rally. So I'll take that all day long. This pop into resistance, just wanted to share. And then it's simple. I will not add, as I've been stating for weeks now, if not months, above the bottom of the range. Remember on QQQ, the bottom is around 433, but I also showed you on NQ, we have it a little bit higher at 18046 right there. You can see, and that is, again, the February to April trading range broke down right there. And so you got a little bit different levels. So this is comparable to where you're at on QQQ, although, again, the range is defined a little higher. And so that gives you a little room here. And that's it, because if you take it out much more, if you go there, first of all, I wouldn't add just because it's big resistance and it has no business being recovered. If it is, like I said, it's not an immediate cover shorts for me. You have a downtrend line, a pretty significant one off the highs. It's just above, comparable to what just capped NVIDIA recently. And you also have, as you can see here, for the first time in a while, we had divergence yesterday. There was a divergent high right there at the downtrend line, and there was a big rejection. You can see I'm talking about the minor. This is the minor downtrend line. Rejection right there, down to this uptrend line. Popped the trend line right here on the week employment data today, but right back to that 17,946 level I've had here for a while. That's where we consolidated. And as long as it's only a marginal push and it's contained around 18,000 or so, then you're still going to have negative divergence. The first divergent high on the 60-minute time frame, other than this one, but remember this one right here, this is just an extension of that, unless it's taken out. And now here's the thing, guys. Now let's talk about it going the other way. We take that out, you take out divergence, you regain the trading range. You take out the trend line there, and that's probably the line in the sand, and that's where I think I'll be stopping out, possibly even reversing, because that would most likely shoot us up to the top of the range. And as I've been saying for a long time, if we happen to get well into the range and get close to the top, we'll probably punch out above it. It would be my guess. I don't think that's going to happen. That's not my preferred scenario. Otherwise, I'd be long at this moment, and I'm not. Back to a net short position with some room to add, and I think that's about it. Let me just see if I covered everything here. ES, these are your S&P 500 futures. In pre-market, these are, the reason I'm doing these, it's easier chart to cover. You can see the levels show better. And same story. You have a still, and again, this is the first one. You can see here, we had a divergent high there. And it's not as if it didn't play out. It played out for one of the biggest drops in a while. And so now all we do is, it's that same divergence has grown even larger. So it started at this point with the indicators making lower highs and prices making higher highs. So that's it. So this is in my opinion, you can call it what you want. You can take it to a, full short position with stops somewhat above a tight stop. It depends how you've been managing your trade. If you were, a long-term swing trader, trend trader, and you're sitting tight, that's it. So we rallied back to the third time. I have to say, again, the one thing giving me pause on why I'm not going to a aggressive short position. I have removed the hedges, but I've got room to add to the index shorts, is these higher highs and higher lows. Back test, and guys, also I want to say this, and the fact that we've already back tested this level. That was the initial breakdown and back test. But this back test, ideally should have been the only one. The fact that we're already back up there again, it's a bit atypical. That's how I would describe it. Usually you're going to come in, you get a back test, full back test, and it's usually one and done. So there it is. That's what we're looking at. If you are still long treasuries, if you're still long TLT, there's still very much the chance. I believe it may get to the downtrend line. To me, I just this was the TLT pre-market. What it was, it hit the gap right there on TLT. I had the next stop here at 91, but it was that ZB chart, the level I showed you, and it was the same chart I originally threw out there when we took the TLT pure play or hedge right there, right off the lows. So it's been a nice run, again, more than offsetting any give backs in QQQ. And of course we were long QQQ off T2 for half the move up so far anyway. So I'm going to end it here so I can get the video out. I'm going to probably get a knock on my door any minute now. And as soon as I wrap up, or can get a minute, I'll get back and we'll see where this market goes today. But remember, we still have, what was it, ISM services at 10 a.m. today and the opening bell at 9:30. I'll comment later on Apple. The narrative on Apple was it wasn't as bad as expected, yet they beat earnings. It's such a, Joe, we always know, and I've always said the Apple and some of these big companies, they're nearly $3 trillion companies, and with that $3 trillion, you buy guidance. They control the analysts. We always know they almost always beat the estimates, but yet it's funny how the narrative is Apple rallied on less news that was not as bad as expected, but yet that doesn't make sense, because if you beat expectations, so the narratives that I've seen coming out of the journal and Barron's and all these headlines, it's almost laughable. Bottom line is they beat the estimates they guided to, which they always do, but yet you have sequentially declining revenues in Apple, and Apple is, keep in mind, is basically it's a value stock priced as a growth stock, and it's no longer meeting that growth criteria. Yeah, big share buybacks coming and all that. So we'll see what the market does, because there are probably a lot of growth funds that, if they stick to their prospectus, which governs their investing style, sooner or later Apple, after all these sequential declining quarters of declining revenue, falling iPhone sales, will most likely have to be, they'll have to jettison out of some of the growth funds, but it's still in the indexes. That's, it's going to be a component of the NASDAQ 100 and S&P. All right, guys, I'm going to wrap it up here. I am very eager to see how we close the day. As I always say, it is not the initial reaction. You got to give Apple at minimum one full trading day, which would be today, and then most likely into next week. It can take a few days, but so this is it. This is it's kind of make it or break it for the this swing short today. If we get rejected, and there it is too, 60-minute chart of QQQ divergence as well. Let me just put my divergence line there. So, all right, I'll do an update as soon as I can. Got to wrap up here. This has been Randy Finney with Right Side of the Chart. Have a great trading day.